The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 6th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one and, of course, an extraordinary weekend. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I will go take a look at the circumstance of the markets. We'll look and see what the bulls and the bears, the buyers and the sellers are communicating to you and I throughout this next hour. And I want you to know that I'm absolutely grateful for your presence here. But most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at any time at 877-927-6648. Internationally, 727-445-1044, especially on this fabulous and fantastic Friday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 37 points. She's trading at 17,825. S&P's off about 10 points at 2090. NASDAQ Composite is flat. The Russell 2000 is up 3 points. The DAX closed up 100 points. The FTSE down 11. Gold right now trading out at 1087. That's off 16 bucks. Silver's down 28 cents, trading at 1470. Light sweet crude off 78 cents. Natural gas up just a tad. Leading the charge to the upside here, we got Stamps.com up 26 bucks. ZS Farm up 25. No idea if there's any buyouts there. Tableau Software up 20 bucks. Monster Beverage having a monster of a day. That's up $16. To the downside, Priceline lead the charge off 24 bucks. That's 1 6/10%. Men's Warehouse looks like they're going out of business. They're off 42% out here. Of course, they're not going out of business, but hey, if you buy one get 5 free, that probably would actually get you to get out of business fairly soon. Or what kind of markup do you have on that material? Actually, I don't think it's 5 that they give you for free, right? It's like 2 or 3 extra things. Of course, there's probably something to that deal. Dr. Reddy's Labs, not too ready for today's trading, off 18%, down 12 bucks. Chipotle Mexican Grill, that's on fire today to the downside, off $11. Mohawk Industries down $9.60. So where do we begin our day? Well, we've got a market that is, so what we know about this Jobs Friday versus the last Jobs Friday, September 29th, is we don't have a similar response, meaning last Jobs Friday, we saw the market didn't like the data, went ahead and moved lower. On a 10-minute chart, what took place was it formed a little price relative strength divergent pattern at the bottom, and once price took off from there, it really hasn't looked back. It hasn't looked back, not for too long. Today, we saw price shoot off to the downside. In fact, if we just switch over here, take a quick peek at a 10-minute chart out here. We can look at a 1-minute chart. Now, let's look at a 10-minute chart out here. Here was the first response between 8:30, 840. We saw a move lower. The volume, it doesn't matter whether it was computers trading. There was 131,000 contracts to the downside, and then there was a move to the upside, and this was at 9:30 this morning. So at the open, pushed up with 114,000 shares. Then we saw price move lower at about between 10 and 10 a.m. and 10:10. How about that? 105,000 was going against that session, that 131,000, and that level acted as support. And that's in essence where we're trading. We're sort of trading near the low. This is the ES Mini, by the way, that we're looking at. Sort of trading near the lows out here of that first session, which is right around the 2,082 level. Now you're 2,085 as we speak right now. if you were to look at the markets, we would say, hey, off 28 points, no big deal inside the Dow. Down 8.5 points, no big deal inside the S&P 500. Let's take a look at the Dow, though, and the New York Stock Exchange, because they actually are suggesting the Dow is more, they're both suggesting that maybe there's a little bit more to it. So this is one of these subtle nuances. I don't know how the day is going to end up here, but a little subtle nuance. It says maybe there's a little bit more damage going on than we realize. If we take a look at that price oscillator, what you and I know is we've had this nice little declining tops pattern that began forming on October the 8th. Now, every other time that we've had this declining tops pattern and price has broken below the zero line, that's the green line that's on my screen out here, the horizontal green line. One of the last time, well, we've seen this happen before. We saw this happen at the highs back in the early part of December. We saw this happen at the highs back at the late part of December. We saw this occur back in the late part of January. Each case there, we saw more than just this very subtle move to the downside that we've seen thus far. So if, in fact, the Dow finishes right here, that suggests that we've got more downside action to come. Now, where's that downside action likely to first take us to? I'd have to say it's got to go back to the trend line off of May 19th's high out here. If you take just simply the trend line, the high of that candle session, the high of July the 20th out here, we'll see that price broke above it on October 28th, tested it for a couple days, and then it was off to the races November 2nd. Today hasn't gotten back down to that level. All that we can take a look at when we take a look at the Dow, and that's we're looking at the price chart here. We can see the last 2 days we have very narrow-bodied candles. Now, when you have very narrow-bodied candles up at the high out here, it either means that the market is confused or tired. In this case here, I'd have to say it's tired. Of course, it could be dazed and confused, but right now it certainly is tired. Now, it has not. If it gets back below that little trend line, that's what you should do with your stock chart. Just take a look at that trend line. If price moves back below that, what it does is it opens up the door. Believe it or not, you're trading at 17,834 right now. It opens up the door for a move down to about 16,933. So that's about a 900-point drop to the downside, and that would be your target. Now, it may never do that. It may never. In fact, it may just simply reject the zero line here, may decide to close above it. In that case, then it is the bears that just simply maybe it was 3 downs and out, into 3 downs just occurring during the day today. But a nice little subtle message with inside the Dow. You take a look at the price move and say, no big deal out there. Inside the New York Stock Exchange, also another subtle move here. Right now, you're trading below the price oscillator. Damage price-wise has not been too bad out here. Same kind of pattern, this little declining tops pattern here in its price oscillator out there. Typically leads to a move lower than what we're seeing thus far. Where's that move lower? Well, it's going to, and this is where we probably get the first piece of information, is the 10,362 level. You're at 10,475, so that's about 110 points. So, the New York Stock Exchange likely, well, I don't know, maybe it will be the New York Stock Exchange and the Dow that get back to those levels, should they get back to those levels, first to let us know whether there's something more serious that could be going on. But in fact, if the market were to close right here at 114, what you and I would know, just like, inside the IBD, they look for follow-through days. When I take a look at this, I look for a follow-through day as well. I would say right now, I'd say, hey, the caution light is on big time. If the market closed here, if we had follow-through on Monday, that would be your confirmation that the move to the downside or retracement to the downside has begun. Now, inside the NASDAQ composite, it's like not so fast, right? Not so fast from the standpoint, its price oscillator is above zero. It's well above zero. It only needed like about 970 or so net declining issues to the downside. We haven't seen that today. We haven't seen it as of 115. So now we have one of these markets where we do not have any kind of synergy, no consistency. And really, it's all about the NASDAQ. We know the NASDAQ composite, NDX 100, it has the power, it has the strength, because it does wheatgrass every day. No, that's not why it has the strength, but of course that is not a bad deal out there. But it has the strength to go ahead and move the markets higher. So this has not given us any signal at all that it's ready to go ahead and give it up. Well, I may say that in jest. Let's take a look at the S&P 500. What's its message? Yesterday, you and I, we spent a little bit of time on the cone of silence here. That's that little rising trend line that took place from July the 7th to the bottom, on the bottom side, and then off of that July 20th high, we saw price just work into the into the apex of that triangle. The apex of that triangle, if you just simply take a horizontal line, which we have on our screen, we can see that was tested yesterday. It's being tested today. It's trading just slightly below it. That actually is a level of support. It's a small little nuance. If you get a close below 20.92 probably, then you've had... when you're closing like right here or you're trading right here, it's hard to say whether that because, this can move up or down, a point or two. It's not that big of a deal. But let's just say if we close below 2087 or so, what's the low so far that we've had today? 2083. We'll say 2085. You close 2085 or lower, pretty good chance that 2020 is the vision of where price will actually head to. Yeah, I like how that worked out. So that's taking a look at the S&P, the Dow, NASDAQ Composite, New York Stock Exchange. I say let's go ahead and just let's go have a nice lunch. Let's go have a 3-martini lunch out there. Do we need to do more? Oh, we do. In fact, we've got an email here from... I see we have 2 emails. We've got one from Greg. Greg is inside the UNG, asked if we could take a look at natural gas out here. So let's go take a look at the current contract for natural gas. And right now, trading at about 237. Nice move yesterday. We took a look at that. Pulled back this morning. The price level that it pulled back to this morning out here was about $2.31. Now, here's the interesting thing about where natural gas pulled back to. So this is nice and bullish for you, Greg, who's in that trade. Yesterday, we spoke with Brent in California. He is in that trade as well. And here's the cool thing about what natural gas actually did here earlier in the day. So thanks for sending that email. What it did is if we take a look at where natural gas broke out, and this was at about 10:30 in the morning. This is a 10-minute chart, by the way, that you and I are taking a look at. And natural gas, let me move this little thing over here. Natural gas had 14,000 contracts that were purchased in a 10-minute period of time between 10:30 and 10:40. The bottom of which was, or the low of that breakout, was $2.31. And where price actually pulled back to intraday here into the 9:50 time frame was $2.31. You got to like that. In fact, it pulled back to 2.317. And if you take a look at the low of that session, it was 2.317. Here's what we know. Here's what you and I can conclude at this time. We don't know this with certainty, but I would say one of 2 things. Either that buyer saw price pull back to a level that they were building a position and they're still back in there, or somebody else like you and I was looking at that and said, you know what, I'd like to get in on this natural gas trade. Where's the best place to do that? And that was place number 1. Come back to where I have some support. And that is exactly what has taken place thus far. So that piece of the trade looks pretty good. If we go back to our daily time frame, whoops, didn't mean to close it up. Let's go back to the daily time frame. Let's go ahead and turn off that little horizontal line. Let's put on our TAS market profiles. And as we do that, as we go into this break here, we're going to see that price found support right at its daily point of control. Natural gas on its way to $2.43. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Let's go out to California to speak with Carlos. Carlos, thanks for calling. Thanks for holding. How are you doing this morning? Uh-oh, Carlos dropped. Well, that is too bad. Now, Carlos wanted to take a look at ticker symbol DST. Unfortunately, I don't know what Carlos wanted, what piece of information he wanted about DST, but let's take a look at it anyways. Hopefully, he's still listening in. Now, if we take a look at this equity, you can see here, huge day to the downside way back on July 23rd out here. You know, I don't know if that was an earnings date. I don't know why it's not on my screen out here, but something occurred. Certainly, I thought I had that tool turned on. Earnings label. No, it's dividend earnings. Let's see. Yeah, okay, so we know it for sure. So we had a nice little earnings date. Of course, maybe it was a lack of earnings. Who knows what it was? But back on the trading session of July 23rd, this equity went from, in essence, it went from a high out here of about $130, $133, ended up making a low on August 25th at about $95. That's one heck of a roller coaster ride to the downside. Now it has crawled its way back to the $124 price point. Last earnings date was out here on October 22nd. The market responded pretty positively to that area. Just prior to that date, it had already made a 1-to-1 A to B equals CD to the upside. Then it went ahead, made a nice wide range of bar into the 1 to 1.272. We just take a look at expansions of that C to D leg out there. Whenever you come into a area or you could see some type of reversal and you're coming in with a wide-ranging bar. Markets don't end on wide-ranging bars. It didn't end here. It just paused for a few days, went up into the 1.618 level. We can see as it's doing this elevator, it's just pausing for a few days. Pretty good chance that what this equity is trying to do is make a 1 to 2 A to B equals CD to the upside. 2782 is likely its next target. Now, if some type of bearish reversal signal were to show up, I would have a different opinion. But right at about the 128.48 to 126.28 could be a Gartley sell pattern. That's only if, in fact, the bears show up. We can see that all the way along this move here to the upside, really no bearish reversal signals, and that's what I would be looking for. That is ticker symbol DST, and that was for Carlos. Had some requests inside the Tiger's Den to go check out gold and metals and the yen and currencies, so let's go do that. Let's start off with currencies. Let's take a look at the euro versus the U.S. dollar. You got the U.S. dollar index up $1.33 right now or so, trading out at 99.38. You and I talked about this during the week. We were looking for the euro to come back and at least test a significant level of support. Let me turn off these profiles out here. That way our chart will just be a tad bigger. There we go. And that was the lows that we were looking at from the trading day of May 27, which was $1.08. Well, today sliced through it like Kerrygold butter. You don't even need a warm knife with Kerrygold butter out here. So price inside the euro, unless there's going to be some type of miraculous rebound, which I doubt will take place, what the euro has done, it's sliced right through a level of support. It is no longer support. It may be resistance, $1.08, and more likely what we're going to see is we're going to see the euro move all the way down to $1.04. Now, that is the low out here. Maybe it goes further than that, but that is the March lows, March 16th. Maybe it only makes its way back to $1.05, which is the lows from April 13th. I think not. I think it's going to get all the way back to that $1.04 area. Now, when I say I think, the charts really look like what it says to me is it wants to make its way back into that March 16th level. Now, that being said, and how we go ahead and we tie all this together, we won't be able to tie it all together in a minute and 28 seconds out here. But if we take a look at the U.S. dollar index, it's broken through because of its correlation to the Queen, which is 57%. We can see that it's broken through a level of resistance at about the $98.51 mark. Very likely what the U.S. dollar index is doing is head back to 101 to 102.45. And so the question becomes, when we take a look at gold, we take a look at miners, do you think that's going to go ahead and put a little heat on that sector out here? And the answer is most likely yes. Now, we may see some stalling in those areas, and I would anticipate some stalling. But to add fuel to the fire for the U.S. dollar index going higher, take a look at this Japanese yen. This thing has weakened hugely today, trading up at about $1.23. It's broken through any kind of level of resistance. And so the euro, not the euro, but the Japanese yen versus the U.S. dollar is probably headed to $1.25, probably the June 5th level right around 125.73 out there. Well, as this gets weaker, the U.S. dollar index gets stronger. The Japanese yen is 10 to 13%, I don't remember the exact number, of the U.S. dollar index. So we basically have 55, 65. You probably have close to 70% of the basket of the U.S. dollar index that says it's going higher because those currencies at the present time are weakening. Dow's off 13, S&P is down 7. We come back, let's go take a look at gold. Let's take a look at some of the miners. Let's go see what kind of volume we have at 1:30 in the afternoon. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we took a look at the currency market first because the request was to take a look at the gold and the mining equities. And since gold is really just nothing but another hard currency out here, I think it's helpful, especially since you and I know the directional correlation, not a tick-for-tick type of move, but we know the directional correlation between the U.S. dollar index and commodities, specifically gold out here. And clearly what we have seen thus far is breaks of support levels inside the euros, break of a resistance level inside the yen out there. The combination of the two, as we talked about, are pretty close to 70% of the U.S. dollar index. So we only have to focus on those two. We know that those are headed to, appear that they're going to go ahead and get weaker out here. That being said, then the U.S. dollar index ought to get stronger. So now if the U.S. dollar index gets stronger, is it likely that we're going to see gold form a bottom and then move higher from here? I would have a tough time concluding that the answer to that is yes out there. So if you've got a different opinion or you believe that it will, then that's cool. But let's take a look at what gold is also doing here. So we're looking at the current gold contract. One of the things that you and I know is that gold is trading into the swing point where the last bottom was formed on July 24th. Now, the top of that was 1101.50. The bottom of that swing, which has not been tested, is 1073. You know, whether it's volume or not, it doesn't matter. If you close inside a swing point, that means today, if gold closes underneath 1101.50, odds favor that you're going to go test the in this case here, the bottom of that swing point. Maybe you're going to test it, maybe you're going to bust it out. So that says that gold has lower to go. Can it find support right here, right now, without going down there? I would say the answer to that is yes. And the answer to that is being yes is because if we take a look at our TAS market profile low out here, you know, the fair value auction level, if gold can actually hold the price point of 1137, then it could actually find a timeout. And by timeout, I don't mean a bottom. I absolutely do not mean a bottom here. If we see some kind of sign of strength in gold, then we'll go ahead and we'll think otherwise. But at this stage here, either this becomes the resting point before it goes and tests or busts out the 1073 level. And I say resting point because we can take a look at this nice little moving average cross that actually took place yesterday. If you listened to the show yesterday, you know that I was saying, you know, gold should be getting ready. I didn't say that it was yesterday, but gold should be getting ready to take a timeout. We know that I specifically didn't say it was yesterday I was going to take a timeout because we had a call about some mining equities, and I said, no, the GDX specifically. Let's not go even take a look at buying the GDX out here, and we'll go take a look at that as well. So when you get this moving average cross right here, oftentimes you'll see a pause in price. Not all the time, but it is something that you want to pay attention to. So it seems to me like gold's found a little bit of a home around 1089 to 1070 is the likely scenario out here. So that's what's going on with it. And then you have to factor in the mere fact that the U.S. dollar index should be moving higher as well. That should keep some pressure inside of Goldilocks. Now, if we go take a look at the GDX, now in the GDX, that's the Gold Vector Miners GDX out here, GDX ETF. And if we take a look at that, you know, what you and I like to do is just make sure we understand, you know, the top 10 holdings. This has got 35 constituents inside it, 10 of which represent 55%. Gold Corp number 1, 7%. Newmont Mining number 2. Barrick Gold, Franco-Nevada, Agnico Eagle, Silver Wheaton. If we just take a look at the top 5, you've got 7, 12, 19, 29, you've got 30 some odd percent, 31, 32, 33%, just by taking a look at 5 of them. Well, first let's look at the GDX. What do we know about the GDX? Well, what we know about it is it's below all market profiles out there. This thing gapped down to the 0.786 retracement level. It looks like it has not tagged or touched the bottom of the swing point, the September 11 swing point. Volume on that September 11 swing point was 63 million shares. You're into it today with 31 million shares. You've got a wide-ranging bar to the downside. That's right. That gap out there, you need to go ahead and close the gap. When I say close the gap, fill it in visually out there. So you've got a wide-ranging bar moving into the 0.786 retracement level. It says it's going lower. That says it's going to go test 1328, maybe 1262, maybe even lower. We can see we've got that similar kissing of those two moving averages coming together right here. So it also says a stalling procedure would be in place. So just because it stalls here or for the next few days, that's natural with regard to everything that you and I have taken a look at. That doesn't mean that it's found a bottom. We got to be paying attention to what goes on, in my opinion, of the U.S. dollar index. We also want to pay attention to some of these equities, say the top 5, Gold Corp, GG. Let's go see what its message is out here. And Gold Corp looks sick. That's the number 1 weighting structure inside the GDX. I don't think I would want to be buying the GDX knowing that it blew through its consolidation, right? That's that not black, but blue box on my screen out here. Remember, when you break a consolidation, what that gives us, it gives us the ability to identify a measured move. So if we just simply take a look at this, whoops, don't do that. If we take a look at this says Gold Corp. Just one easy way to do it. Could easily be headed down to about $8.13. Now, we can go way back on the left-hand side of the chart to figure it out. But let's see if it was busted with volume. And the answer is yes. You see, the swing point low inside of Gold Corp is September 30th. That has 11.4 million shares. It's only 140. You've done 10.1 million shares. Not you, but Gold Corp has done 10.1 million shares out here. So this thing is headed lower. Where is it headed lower to? It was in a consolidation. It's broken through the consolidation until it closes back inside that consolidation, which means above 11.95. We have to presume that $8.13 is on the table. That's the number one weighting structure inside of the GDX. Number two is Newmont Mining. NEM is the ticker symbol there. If we take a look at Newmont Mining, another wide-ranging bar. Yesterday, big volume coming out of it, 14 million shares, as it was moving into 11 million shares where it had broken out. This looks to be healthier, certainly, than Gold Corp. It's come all the way back down to the bottom of its weekly TAS market profile at 1690 out here. Maybe it's found support at the 1690 area. So Newmont Mining looks healthier, which is hard to believe, but it looks healthier than Gold Corp. If we take a look at Barrick Gold, ABX is the ticker symbol. Barrick Gold today has got 15 million shares to the downside. It's coming into a level. In fact, it's tested an area where this thing had broken out, and it broke out with volume of 28 million shares. You've done 15 million shares. So it is likely coming back with a bit too much whoops. I mean to draw that yellow line there. Let me move this off to the side so you guys can get a snapshot of it. So this thing here also finding support at its weekly profile low. Would I suggest buying it? No. I absolutely would not. It's coming back with too much volume into that breakout area. I think that gold will time out. That's what we should expect here inside these mining equities. But I don't expect that what we have found here is any kind of significant bottom. If we take a look at Franco-Nevada, FNV is the ticker symbol. This today is, this yesterday you and I looked at it, and this was a signal. This was a real tell to you and I. And at Franco-Nevada broke through a B point of an A to B equals CD to the downside with volume. We noticed that just when we were on the show live. The swing point was a trading day of November 3rd. It had volume of 1.1 million. Yesterday did 1.7 million shares. Today you've done another million shares in gapping down. This thing is on its way back to $43.21, maybe even lower. And this is one of the supposed strong dogs out here. Let's go ahead and finish this up. Let's take a look at AEM. That means we've looked at basically 30-some-odd% of the GDX. This thing gapping down. So you've got a second wide-ranging bar gapping down to the 0.618 retracement level. Looks like almost to the penny. 24.84 was the number. The low so far, 24.83. Volume today, 2 million shares. This is down below its weekly profile low out here. This, too, does not look like a picture of health. Now, it did break out. It did have nice volume. Back on September 24th, you're trading inside that candle. This says to me it's likely that low where maybe Agnico Eagle finds a bottom, but that's not till you get to 23.82 to 23.25. Your 0.786 as well as the low of that candle session. So it does not look too healthy when you and I take a look at the U.S. dollar index, where it is headed to, and when we take a look at these metals out here. I would assume that at around 3:30 when the CFTC COT data comes out, because it's as of last Tuesday, we're not going to see any kind of significant change in the holdings of the commercial traders, and they don't exit their position. The positions are too large to exit their positions in one trading day like today. So it looks to me like there's more pressure to the downside inside of Goldilocks. So hopefully that helps you out inside of the Tiger's Den. I'm just seeing here, did I catch everything? If I didn't, just go ahead and type in something that you want me to take a look at. In the meantime, while maybe that's going on, we've taken a look at, we haven't looked at silver, but we can look at silver too real quickly. So as we take a look at silver, what you and I know is silver today broke through its rising price channel out there. So now it's broken through a level of support. Silver is on its way back to 1446, where it did break out on the trading day of October 2nd. But the problem is it's trading into the swing point out here from August 26th. Pretty likely that silver headed down to $13.95. And let's not forget that commercial traders had conviction when it came to silver. Gold was had conviction, but it was so-so. In silver, there was no question that they were anticipating that silver was going to get crushed. And that it has over the. In fact, if we put this on a weekly chart, we just take a look at silver on a weekly chart, commercial, and look at that. You've got a nice wide-ranging bar. This says silver is headed down to $13.95 before, and maybe before it finds its next bottom out there. If we look at individual stocks to get a feel for what's going on out here, if we take a look at things move, let's look at some things moving to the downside out here. Insight Corp, one of the equities inside of the IBB out here, just totally getting demolished. Not sure why. This is the weekly chart out here. But this thing could easily pull all the way back into the $50 area. Let's look at what it looks like on a daily basis out here. So on the daily... That is the daily. That was the daily we were looking at? Nah. Look at that nasty day today. This thing has, where is this thing headed to? Well, the next time that it finds volume, if in fact, and it hasn't done it yet, but the low on August 24th, we'll use that as our benchmark, 89.37. If this thing moves below that level out here, well, then you could say this thing has been in a consolidation from $88 to about $130. So we'll just use 90 to 130. That's $50. That says $40. And if we take a look at the last time we saw any kind of volume, well, it was at $70. So next stop, it looks like for Insight, is down around $70 or so. Ticker symbol there, INCY. Priceline, PCLN. Let's go take a look at it. $25. This has completed an A to B equals C to the upside. For some reason, it has vanished out here. Now, let me see here if this has a chance for an island reversal. So the high in the case of Priceline that I'm looking at is a trading day of October 29th. That high, 1248.42. 14, what the heck was, 1428.42. So I'm a little dyslexic every now and then, which is actually good because it allows you to see things differently. So if we take a look at this from your purposes, if we take a look at the high, 1428.42, the low so far, 1430. Okay, so we have a little bit of a gap there. So on Monday, assuming that it doesn't get down today, intra-session to 1428.42, and for some reason on Monday, Priceline gaps down, doesn't get below, let's say, today's low out here, what Priceline will leave is an island reversal top at all-time highs. And that's something to behold, and that's actually something to trade. It would become an easy trade to the downside. If it doesn't do that, then we have to take a look at other patterns out here. It doesn't mean it won't move lower, but, it's very subtle. You would maybe not pick up on it, but there is a gap. So remind me on Monday to go take a look at Priceline out here. If we take a look at, now, we had a request to take a look at high-grade copper out here. If we take a look at the current contract, this looks pretty ugly as well. This is going to trade down into the swing point, just like gold, just like silver. But this is going to trade all the way down now into the August 24th lows, which is $2.20 out here. If we go take a look at the and I don't see anything to get in its way and stop it from doing so. If we take a look at a continuous contract for copper, give me a moment to put that up here, and let's put on a longer term time frame, get a feel. Let's put this on a monthly time frame, get a feel for what it might be going up against, if anything, out here. And if we just simply go take a retracement from the 2009 low, December 2009 low, all the way up to the high here in February 2011, this says that it needs to pull back to probably $1.98 to the 0.786 retracement level. So it looks like that's where it's going to head. That will be the case if, in fact, on the current contract, it can go ahead and take out that low from August 24th. That is on high-grade copper. Also to the downside, let's take a look at Men's Warehouse. Oh, we've got John in Philly. My apology, I didn't see that. Hey, John, how you doing this afternoon?
Hey, Steve. Thanks for taking the call. Not to interrupt your discussion of Men's Warehouse, but
no, I'm glad that you did. We're gonna go to a break in a minute, but let's talk. You wanted to take a look at the NDX 100. What specifically are you looking for there?
You did an excellent review for us, and I had a follow-up question, cycle-wise or timing-wise. Do you see higher prices into the end of the year? That's what I'd like your thoughts on, please.
Okay, we'll be right back, and we'll speak with John. We'll take a look at the NDX 100. Dow's off 8, S&P's down 7. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're on the line with John from Philly, and we're taking a look at the NDX. And the question was, do I see, John, the question was, do I see prices going higher into the end of the year inside the NDX?
Well, yes, very specifically, Steve, since you're so thorough, I'm wondering if there's any time or cycle work that's available to you that would suggest whether or not into year-end NDX is higher from here?
No, nothing per se from a cycle standpoint that I can recall off the top of my head. I'd have to pull up the cycle charts. But what I can say to assist us at least to take a look at answering that question is that if we take a look at the daily chart for the NDX 100, here's the things that we know. Off that August low, it has completed a 1-to-1 A to B equals C to the upside. That price projection was 47.16. It got up to that level, and while doing that on the trading day just a few days ago, which was the trading session of November the 4th. What it did when it completed that pattern is it went into either a 6th or a 7th wave move to the upside. Just depends on which swing point we do our counting from. And at the same time that it was doing that, John, it was moving higher with less relative strength out there. Always a pattern that suggests that at least a short-term top should be in play. And then yesterday was enough of a candle session to form the Three River Evening Star. So that is a bullish or bearish reversal signal. Unless those candles get taken out today, we've gotten the signal that price ought to pull back. Where should it pull back to? I would say 44.50. I would say the September 17th high is a likely price target. Now, if price moves above the high from 2 trading days ago, November the 4th, which is a 43.70, 47.37, if it moves above that, then that says to me that these patterns will have failed, and price ought to move up to 48.97. That's your 1-to-1.272, maybe even 51.26. So we have to watch the high from just 2 trading days ago. That price relative strength divergent pattern, always worth paying attention to. The last time that we saw one inside the NDX 100 was back here on April 27th at its highs. We saw price move lower for just a couple of weeks out here. Actually moved up for longer than a couple of weeks. Actually moved sideways up until about the middle of July. But again, once those highs were taken off, prices went higher out there. Now, that's what the daily chart shows. What also occurred, now I'll share this during the Tom show later on today when I do his segment at 3:30. But here's the interesting thing. You know, John, when we take a look at trend lines, when we take a look at channel lines, both you and I know, everybody knows that the New York Stock Exchange and the Dow were moving back to either trend lines or channel lines back in that August-September timeframe out here. And the NDX 100 was nowhere near that, the green line that's on my screen out here. And I was so focused on the trend lines that I had a scotoma where something was in front of me, but I didn't see it. And I didn't see it until because I was trying to figure out how did that market, move on September 29th? Why did it move so high? What was going on there? And it really was the power of the NDX 100. Well, I went through that scotoma because I just went back and put the normal channel lines inside the NDX 100. And we can see here that back in November of 2013, price started breaking above that diagonal channel. And just like horizontal channels, diagonal channels out there, once you break through one, you can go ahead and you can go to the next level out here. And that next level is exactly where price was finding resistance, where we're trading today at 46.98. So it's got resistance there. If it can break above this level, then the answer, so if it takes out that daily high that you and I looked at, then this says that price moves up to the next level, which is in the 5,000 area out here. So that's what I'm watching. If the daily pattern that you and I just looked at fails, then that says, yes, price moves higher into the end of the year. I hope that helps you.
Thank you very much on that. Steve, just in closing, I want to just bring to your attention a post I put in the Tiger's Den regarding gold.
Okay, 5 seconds.
It's a monthly chart, and what is featured is the December 2009 high volume high bar.
Okay.
And the low for that is
John, sorry to cut you off. We're going we're ending the show, but I'll go take a look at it. Hey, folks, have a fantastic weekend. Stay tuned for David White.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.
Trucking, got my chips cashed in.